So you're all here because you're interested in commodities. Right? Fair? You're interested in commodities because you're interested in potentially making a return on some investments. Is that fair? So what I think of when I look at commodity companies, I've been in this sector for over 20 years and have been focused on the mining sector particularly. And from my experience, there's a few things you want to look for. First and foremost, I think what's really, really important is a management team. A management team that has either operated mines or has successfully sold or merged companies to create a better, more robust company, or a company that has made a discovery of some particular metal. So when you make a discovery of a particular metal, depending on the size, of course, but when you make a discovery, that creates significant shareholder wealth. Potentially you've seen this before where somebody comes out with a news release and the next day their shares have traded millions of shares and their share price is up 100%. That's what we all look for when we look for investments in, well, all aspects of any sector, but in the resource sector. So those two things for me are really important when I invest my own money into the sector, which I've done with this company. But now let me tell you a story. This is an actual story. Past performance is not an indicator of future success, but let me tell you a story. And most of us that have been involved in the resource sector, and Johan has seen this many times, have had successes like this if you've been an investor in this space for a while. So, 2014, the gold market was terrible. Terrible. 2015, the gold market was not much better. The same group of people that started Calibre Mining decided, let's put together a public company and look to buy gold production that has potential opportunities to expand the resource, optimize the mine, get some cash flow going so that we can reinvest back into other opportunities. So in 2015, myself and 3 other founders of this company founded a company called New Market Gold. So New Market Gold, we were successful in acquiring what we set out to do to acquire gold production. We acquired 3 producing mines in Australia. They were not great mines. They were not great mines. They were at the end of their mine life. They were very high cost. There was debt in the company. And it didn't look that promising to begin with. But as entrepreneurs, you have to be positive. You have to look through the lens of uncertainty and look for some opportunity. And we saw some opportunity there. And in 2015, when we closed that deal, the stock was trading around 50 cents. We immediately started to look at ways to optimize the asset. We brought in a COO who was with Newmont for over 30 years. He was an optimizer. I call him the optimizer because he now is our CEO at Calibre. But what he did is looked at opportunities, and he found some opportunities, but he felt the best opportunity was continue to invest in the mine. The best place to find more resources, or more gold in this case, is always at a gold mine. And so in 2015, we started to heavily invest in drilling. And wouldn't you know it, we made another significant discovery. Actually, in fact, we probably discovered one of the highest grade underground gold mines on the planet. Now, that doesn't happen all the time, and I'm not going to say that's going to happen here, but it was the foresight to see, let's buy when nobody else wants to buy. Let's buy not the greatest of assets in the world, but something that we can get into production or have in production and optimize, and then reinvest back into that asset. And we did that, and we felt that things were going very well. Costs were coming down significantly. Production was going up because of the grade of these mines, this one particular mine in Australia. And so we stepped back and we said, there's many different things we can do. We can keep drilling, we can find more, but let's try to create a better financial product. And by doing that, we merged the company, New Market Gold, in 2016 with another gold producer in Canada called Kirkland Lake Gold. So we went from 50 cents a share to $5 a share in New Market. We merged the companies. The stock, I remember Q1 of 2017 was trading around $6, $7 a share as a merged company. And it went on to go up to as high as $70 a share. Wouldn't we all like one of those? I would. So this is why we invest in this sector. So the reason I bring that up, we're not there yet, but this is the same team, the same management team that has created billions of dollars of wealth for shareholders. Again, that's one of the top things I look for when I invest my money. And then I also look for the upside potential. So in 2018, as you can imagine, I will be making some forward-looking statements. But in 2018, we restructured Calibre Mining. It was an exploration company only. Because of the success of New Market Gold in Kirkland Lake, we decided, let's try to duplicate this again and buy production. That's never an easy thing to do. Try to go out to a mid-tier or an underfunded junior producer and acquire production from them and look at ways to optimize it better than they were doing. So in this case, in 2019, Calibre acquired 2 producing assets in Central America. Now, I'll get into some of those details. Actually, maybe I'll just flip to this slide. So in 2019, we acquired these assets. 2 mills with a total capacity of about 2.7 million tons of annual processing capacity. So we require no capital. All the process mills are in place, right? But one of them, the largest of the 2 mills, the 2.2 million ton per annum mill, is heading towards closure. It's heading towards closure because it's run out of feed. They've mined it all out. So we saw some opportunity there. Great state-of-the-art mill. That was in Q4 2019. Since then, we've changed our operating strategy. And today, we are now going to produce 180 to 190,000 ounces of gold in 2022. In 2023, we're actually going to increase that based on new grades that are coming into the mills. So we were going to produce 50 to 60,000 ounces of gold, but because of the new operating strategy, because of the optimizing CEO, we were able to unlock some value and generate a lot of cash to self-fund our growth. So coming back here now, in total, amongst all the assets, we're going to produce about 220 to 235,000 ounces of gold at around $1,200 all-in sustaining costs. So we still have opportunities to reduce our costs further, but we're generating a significant amount of operating cash flow. And therefore, let's reinvest back into the assets. Because again, we're still only utilizing about 60% of the processing capacity in Central America. So we still have lots of opportunity to find more ore and put that through the mill and not require any capital other than that's required to drill. So as you can see here, we're reinvesting. This year, we're going to spend $40 to $42 million drilling. Because based on the experience that we've had, drilling and reinvesting back into those assets is some of the best return on capital. We've made a few discoveries along the way, but not a big discovery yet. And that's likely to happen. We think we're in very prolific geological districts and opportunities to find more material, therefore increase the net asset value of the company, increase cash flow, and reduce costs. We've got $80 million in cash. We've got no debt. We don't have any plans to take on any more debt. We're unhedged. And we've recently completed an acquisition to grow the business further. So we're not only producing gold in Nicaragua, Central America, we're now also producing gold in Nevada, the United States. And our stated goal from day one was to grow into a mid-tier, self-funding, reliable gold producer. So we've started from nothing, we've acquired production, we've optimized that production, and now we've acquired our second asset to grow production even further. And I think it's important to note, as I mentioned in the first story, is that we've created a lot of wealth for shareholders. And not only that, but we invest a lot of our own capital into this business. The whole team has invested over $10 million into Calibre Mining to try and create another successful business. You saw a few of the slides by Dr. Denon. Okay, this presents an opportunity, and I think Calibre presents a very compelling opportunity as a self-funding gold producer, generating cash, adding cash after investments quarter over quarter, leverage to A, discovery, low capital because we have the facilities in place to grow our production, and B, the price of gold and the ratio that you saw in one of the previous slides by Dr. Denon. So I think it presents a very compelling opportunity. I talked a little bit about this. We had a very strong quarter out of the gate. We did about 4 cents a share adjusted on the back of the new acquisition that we just completed. So we're generating robust cash flows to be able to reinvest back into the business, but generating free cash quarter over quarter at these metal prices. The future looks quite bright for us as well. We've been advancing projects, as you can see on the top right chart here. By reinvesting back into the assets, we've grown our reserve base 250% after producing over 300,000 ounces of gold. So that's why it's so important to reinvest capital back into the assets for sustainability and that potential to find a big discovery. On the bottom right-hand chart here, you can see that quarter over quarter, year over year, our grade profile, so the grade in the rock, is increasing. This is quite positive. The less material you have to mine to produce more gold means lower costs. So we're looking forward to a very robust 2022, 2023, and 2024 because the grade is increasing as we bring on new sources. So I'm very optimistic about the near-term future here for Calibre. This is what we've done a little differently, and I know we're probably getting close on time, so I'll try to be very expedient here, but I mentioned mills. So there's a 500,000 ton per annum mill there that's fully utilized. We've got a large spoke or resource base there that we haul excess material over to the second mill, remember, that was heading towards closure in 2020. So the CEO decided it was a good idea to haul material over rather than build out the size of this mill to a much larger size. So we're utilizing effectively and efficiently this second mill and generating more cash flows, adding more cash to our balance sheet, allowing us to reinvest back into our business. So we're hauling material to this mill. We're fully utilizing this mill. A Pavon project, we call that. It was discovered in Q4 2019. We advanced it, we permitted it, we put it into production, and we started to bring it down to our mill for less than $15 million. So that's about 300,000 ounces at 5 grams. It's a nice resource base. It's not huge, but the nice thing is we can get cash flow out of it very quickly, and we have been doing so, and then reinvesting back into the business. This is our next one that we'll be bringing on in 2023. Again, utilizing the infrastructure, no capital is required other than drilling and slightly advancing permits. We're almost there now. So this, to me, presents a very compelling opportunity. So we've been going out and acquiring new concessions all the way along this prolific belt. So past production, 3.6 million ounces, in resources over 1 million ounces. The deposit here is 2 million ounces. This is 2.7 million ounces of past production and a 3 million ounce deposit, but very underexplored belt all the way along here. Low risk for us because we don't need to go out and raise capital to put drills on the property to find gold to put into our mill. So it's a very unique opportunity because a lot of companies will have to go out and raise a lot of capital or take on a lot of debt to build a new facility. So the company today has about 2.8 million ounces in resource, as I mentioned, a little over 1 million ounces of reserves, and effectively utilizing the facilities here. So that's what creates the unique opportunity for us. We don't have to go to the market and raise more capital. We've got 80 million in the bank, and we're generating very good cash flows. So just to present what this opportunity is, so this is the second mill that was heading towards closure, and this year it's going to produce 120 to 130,000 ounces. Our reserve grade is 4.6 grams per ton gold. That's our reserve grade. Today, we use about 50% of the mill, right, by hauling the material around the country on paved highways. So the opportunity as we get closer and closer to reserve grade is higher gold production. And if we're successful discovering new zones along that prolific belt, getting to 75% utilization just from this mill alone, we would produce 250,000 ounces of gold, or 200,000 ounces of gold, depending on the grade you put in. But it doesn't require additional capital other than drilling on some of these new targets. So it's not going to require a new mill. It's not going to require upgrades. It's all state-of-the-art facilities in place. And then, most recently, we went out and acquired a project in Nevada, which adds 40 to 50,000 ounces a year of production in Nevada. As the Fraser Institute would say, it's one of the best mining, if not the best mining jurisdiction in the world. So we've diversified our portfolio. With that asset comes a second development stage asset, which we're advancing. It's a federally approved project, and based on the 2020 PEA done by the previous company, would produce between 50 and 55,000 ounces of gold a year. And we're advancing that project through state permitting and potentially look at putting that into production, say 2024, 2025, as we advance through all the studies that are required. So, just finish up with this slide very quickly. As I've mentioned, Calibre Mining, on an enterprise value to ounce of production, we're trading at a significant discount to our peers. We're generating cash quarter over quarter and adding cash after investing between $15 and $25 million a quarter in drilling or new mine development. We're advancing studies in Nevada, which could potentially double our annual our production out of Nevada. So all of these things that I've mentioned right at the beginning, the team that have done it before, the opportunity for success in expanding resources or making new discoveries is all part of this company. And we will be opportunistic and look at new opportunities because, again, we'd like to grow the company to 400,000 to 600,000 ounces of annual production, reinvest back into that business, and look at putting out dividends or doing share buybacks for our shareholders that have been with us. So without any further ado, I thank you very much for your time, and stay tuned on upcoming events for Calibre Mining.